Okay, so in today's video, I wanted to talk about how to invest in countries outside of the United States, investing internationally. And then at the end of the video, I wanted to talk about my own opinion on whether investing in the United States is still a good idea. I thought this would be a really good idea for today's video just because of all the negative headlines that are coming out lately about the future of the United States economy. It feels like for years that experts have been claiming that the United States economy would slow down in the future. And really the supporting evidence for this is that they claim that because the United States is a fully developed economic power, that naturally our growth is going to slow down and really be taken by developing countries with a larger population. On top of that, them claiming that the United States economy would slow down would make a lot of sense, especially with the whole pandemic situation. But we've seen headlines like this for years, way before the pandemic ever showed up. I can't tell you how many articles I've seen stating that the United States wouldn't be the best place to invest your money anymore because of slowing growth. Again, before the virus ever showed up on anyone's radar. Other evidence that experts use to support this claim is the fact that other countries are growing at a much more rapid pace than the United States right now, at least according to GDP percentage. The most common example that most people use is
China. Let's say China.
If you compare US GDP growth to China's GDP growth, it's not even comparable. In the fourth quarter of 2019, and the reason that I chose this is because it was right before the pandemic, the United States GDP growth was 3.8%. In the same quarter, China's GDP grew 6%, significantly higher than the United States. So again, as a result of all these headlines and this news about slowing growth in the United States, you see a lot of articles about how you need to be diversifying your portfolio into the international market and investing in other countries. So if you're not convinced that the United States economy is very strong anymore, for whatever reason that is, whether it's politics, an isolated recession, or you literally think that the United States is coming to an end, you'll need to know how to diversify your investments away from the United States. Another reason you should know how to do this is because coming from somebody who loves to travel, I love the ideas of investing in the countries that I've been to. You almost build a connection to the country while you're there. This is because getting to know the people and the culture is just a really powerful experience. On top of that, whenever you travel, you'll go to places where you just feel like there's just so much potential for growth. You can just see it and feel it around you. For example, when I traveled to India, there was a ton of poverty and everything that comes with going to a country like that. But at the same time, you looked around, you knew it was obvious. There were very highly educated people almost everywhere, and there was a clear entrepreneurial spirit throughout the country. Okay, so how do you invest in countries outside of the United States? To explain this, I'm going to review 4 different methods of doing this. First, how to buy all foreign markets outside of the United States. Second, how to invest in specific countries. Third, how to invest in a specific industry within a specific country. And then finally, how to invest in a single stock within a foreign country. Okay, starting with number 1. What if you wanted to buy the world's economy as a whole other than the United States? Well, there are plenty of index funds that target this exact index. One of the most popular of these is Vanguard's VGTSX. It's a total international stock index fund, meaning this is a very low cost way of diversifying your portfolio across the entire world's economy, excluding the United States. This fund will include investments into both emerging and developed countries. Now, what if you want to do the same thing, buy the entire world's economy, but specifically target developed countries? I would go with VTMGX. This is another index fund by Vanguard that targets the international market, but it specifically targets countries that are fully developed. Right now in this fund, approximately 50% is allocated to Europe, 30% is allocated to the Pacific region. This is referring to countries like Japan, South Korea, and Singapore. And approximately 9% is allocated to our friends from the North, Canada. Now, if you wanted to invest in specifically developing international markets, I would go with VEIEX. This again is another Vanguard index fund. It targets international markets, but again, it's targeting specifically emerging countries, meaning countries that aren't considered to be fully developed yet. Right now, this includes countries like Brazil, Russia, India, Taiwan, and China. Next, what if we wanted to invest in the entirety of a specific country? Well, again, there are index funds that target pretty much every market that you can think of. All it takes is a quick Google search. For example, if I wanted to invest in, say, the Chinese market, all I'd have to do is go on Google and type in Chinese index funds. If there's another country that you're just absolutely in love with, if you're in love with France, I'm sure that you could type in French index funds on Google and find one just as easily as I did. The only detail that I would advise you to look for whenever you're looking at these index funds is making sure that they have a very low expense ratio. Typically, a lot of these funds, because they're very specific, they typically tend to have higher fees. I've seen a lot at around 0.7%. Ideally, in my opinion, you're looking for 0.2%. I don't believe you're gonna find something as low as that, especially with these international funds, but as low as you can get that number, the better. And again, all you have to do is just go online and type in whatever index fund you found, expense ratio, and you can find that very easily. So for example, obviously I referred to India before. I'm very bullish on two countries, at least their economies, India and China. Let's say I wanted to invest in the entirety of both of these countries. I would be putting my money into MSCI and EPI. MSCI is an ETF that targets the entirety of the Chinese economy. EPI is an index fund that is targeting the entirety of the Indian economy. Both of these funds range from large cap to small cap without targeting a specific industry. Okay, now what if you wanted to buy a specific industry within a specific country? Well, again, all it takes is a quick Google search. Say I wanted to target internet and technology companies within specifically China. I would quickly stumble upon CQQQ. The only thing that I'll warn you about is, again, high expense ratios. CQQQ includes an expense ratio of 0.7%. This number is definitely higher than I typically look for, but unfortunately, whenever you're trying to target such a specific index, these numbers or the costs are typically a little bit higher. If you want to learn a little bit more about what an expense ratio is, I talk about it a lot more in this video. And finally, how do you invest in individual international companies? For me, when I travel, I a lot of the times notice companies that I've never even heard of almost dominate the country. For example, Tata in India was one of these. When I looked into it, I found out that this company did everything from chemical production, communications, consulting services, customer products, computers, vehicles, steel, household appliances, e-commerce, fashion accessories, retail, hotels, air travel, electronics. It even owns a building that is basically considered a monument in India, the Taj Mahal Palace Hotel. I mean, how can you not want to invest in a company like this? Well, like most publicly traded companies, international companies are a lot of times available on US brokerages. You can find international companies on everything from Robinhood, Charles Schwab, TD Ameritrade, M1 Finance, you pretty much name it, it'll be on there. But there are exceptions. For example, I was looking into investing a small percentage of my portfolio into Tencent. It's a Chinese company. I was wanting to add it to my portfolio within my M1 Finance account, but unfortunately, M1 Finance does not carry Tencent as an option to invest in. Luckily enough, Robinhood actually gives you that option. What I'm saying is, if there's a company that you really want to invest in and you can't find it on one brokerage, most likely you'll be able to find it on another. Okay, now that I've talked about how to invest internationally, I really wanted to talk about my own opinions about investing internationally versus investing into the United States. I think, as we all know, it's been very obvious that the United States has been an economic powerhouse essentially since the start of this country. The economic engine within this country is absolutely phenomenal, and it's proven itself time and time again through wars, recessions, even pandemics. The United States really gives its citizens the ability to compete and try to be the best that they can be based on their own hard work. You can see the entrepreneurial spirit within the United States on a day-to-day basis. You can interject your own opinions about whether that's a good thing or a bad thing, but the fact is it's made the US an economic power. And despite the political strife within the country, that entrepreneurial spirit, you can still feel it even today. And I believe you're going to continue to feel it until the United States falls apart, which I do not believe will be happening anytime soon. And I know what probably most of you guys are thinking. If your political opponent, whether it's a Republican or a Democrat, you believe that it's going to destroy the country. In my opinion, I think that this economic engine that's been in the United States essentially since the beginning is going to continue to run at least till the end of my lifetime. Yes, there will be hiccups and slowdowns in the market. I fully expect those to happen, but in the end, the United States will persevere. Due to this, I'm betting on America, and as Warren Buffett said, nothing can stop America whenever you get right down to it. Never bet against America. On top of this, keep in mind, when we talk about US GDP growth as a percentage, yes, it's growing slowly compared to other countries, but that doesn't necessarily mean that the US as a whole is failing. The total growth within the United States is still extremely large due to the fact that we already have a massive economy. When you're a small developing country, it's not as hard to have a much larger percentage growth as far as GDP. You can actually equate this to this example. Let's say you're making $15 an hour. You get a $5 raise. That's a 33% increase in your salary. But let's say you're making $50 an hour and you get a $10 raise. you only received a 20% increase there. So even though you grew 20% compared to somebody else who grew 33%, the total increase in raise was $10 versus $5. This is basically what's going on with the United States economy. For these reasons, I plan on only having between 10 and 20% of my portfolio in international stocks. I'm not saying that I'm going to be right, but I'm just letting you know what I'm doing. The only reason that I'll be investing more than this in international markets or companies is if I find a company that absolutely blows me away, aka Alibaba, or I'm wrong about the United States and just factors change within the country that we live in. Okay, so finally, this is for entertainment purposes only. I am not a financial advisor. If you have any international companies that you really like that you think I should take a look at, absolutely recommend them. I read all the comments below, so just let me know. Please subscribe, it really helps out the channel, and thank you for watching. Have a good one.
Okay, if you made it this far into the video, number one, I'm impressed, and number two, I wanted to leave you with this absolute gem by Warren Buffett talking about his opinion on the future of the United States.
You had this testing period, and people really, they'd lost faith to some degree. They just didn't see the potential of what America could do. And we found that nothing can stop America when you get right down to it. And it's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America.